A bad CPI report, the Dow Jones falling off of a cliff, and Bitcoin taking a big grizzly bear dump growing those nasty red candles. Let's talk about all this and break it down in today's Crypto Pro News Report. What is up, gang? It is I, Carlton Flowers, your Crypto Pro.
Yay!
And today we have several items on the agenda that we need to discuss. We have the CPI being reported that is worse than what we expected. The Dow Jones is in a free fall. The crypto market is tumbling across the board, and several other things that are influencing these markets happening around the world. So let's break them all down and see if we can make sense out of these charts so we can tell what's going to happen next. All right, first and foremost, this is not financial advice. However, I am just expressing my opinion about what I think is going on with the charts. And then we're just going to have a discussion together, analyzing what is happening around the world that is influencing these markets. With that, let's just jump straight in on this 4-hour chart. It's been a few days since my last report, and we had talked about the possibility of Bitcoin jumping up to this upper limit, the purple dashed line. And we talked about the possibility of Bitcoin traveling upwards to the two volume nodes, the first one being here that we have already surpassed, and the smaller one here. We also discussed the possibility that if we made it to the purple dashed line, there was a chance that we could experience a rejection. But what happened? The CPI, the inflation index that was reported today, which was only 0.2% worse than what was expected. We were expecting an inflation rate of 8.1%, and the announcement today said that it was 8.3%. So that was a little bit negative, and now all of the markets across the board are reacting negatively. But why would we see such a heinous rejection? Could it be that it's all centered on the CPI, or do we have other influencing factors that are feeding into this? What are the charts saying? Are there some technical indicators that could have given us a clue that this was going to happen?
Almighty!
Whoopsie, the phone rang. I forgot to set the phone on mute. But as I was saying, and I don't remember, I think we were somewhere around here, the rejection at the purple line, if it happened, and how we may have had clues, if there were any, of this rejection that we're experiencing right now. Well, the answer is yes, there actually is one small clue, and I'll show you where that is. You see this volume node that is sitting right here. Let's make that a little thinner. Let's change our line weight. Here we go. Here's our upper volume cluster on the VPVR, which stands for Volume Profile Visible Range. And that's how much volume of trading happens at a particular price. In other words, there's a lot of action around this node at the price of $22,500, as with $21,500. So when we see that there is an upper volume node where there's a lot of action, and up above that there's not much at all, we can assume that this point can serve as resistance, which it did. Notice how these candles touched the line and then got handily rejected. We wicked above it just a little bit, but the full body candle is rejected right at the peak of this volume node. Now, we do not see any volume node action above this 22,500 point. This is a slip zone. So if we don't go to this node with heavy volume, and you can see that this is not too heavy a volume, if we don't have upward momentum that can carry us into the slip zone and pop us up to the next node, normally this will serve as a rejection. And that's what we see. When you combine that resistance with the negative report on the CPI, that has the effect of giving us these two big fat red candles on the 4-hour chart. By the way, you will notice that we are now trading below the 200 EMA line and the 50 EMA line, combined with the fact that we are absolutely falling off of a cliff with the stochastic. What's worse is that we see that we were buried out in a very bullish position with the oscillators on the MACD, and now the blue line has taken a cliff dive away from the orange line as they diverge and head south. We are also printing these big fat bars on the histogram, and they are dark red. This comes after a period of green bars where we had a double hump. You can't really call this a hump, but we did have one red candle in between and continued rising with these green candles after the initial pump. Now, this pump right here coincides with this activity that happens in between the beginning and the peak point of the histogram. After that, we noticed a divergence. What does that mean? That means price is going up while the oscillators and the histogram are going down. That was also an indication which would reinforce the fact that we had a high probability of getting rejected at this volume node. So there you have it. That is why maybe we have such an overreaction here, because we have the combined effect of people thinking that the inflation rate would be 8.1%, but it was in fact worse. Maybe people were thinking and believing the stories that inflation would be even less than 8.1%. And now that it has unfolded that it's even higher, I think everybody is getting shaken loose from the markets. So with the fear and greed index, I would assume that we are in a period of extreme fear at this point as we're experiencing this rejection and as momentum is taking us down towards the peak node here, the point of control price on the visible range of this volume profile. And then, of course, we've got the red dashed line. Now, if we come down to this red dashed line and we are still looking bearish, it could flip. We could flip from support right here to resistance once we get here. And then we'll have to look at the 1 week chart and the 1 day chart to determine if we could blow through that line and see further prices downstairs. So let's clear this out and turn drawing mode off and go to the 1 day chart. Here we are on the 1 day. Let's scrunch it down and see what we can see. Wow, well, that's interesting. Let's move this over just a little bit so we can get a good idea of what the VPVR is trying to tell us. Well, first off, let's start from the bottom and go up. We'll go backwards. First off, we see that there is an impending crossover that could happen as the blue line has just turned around and is headed south while the orange line is still moving up. Expect a crossover. We also see a light green candle on the histogram. Upstairs on the stochastic, we see a very nasty crossover after being absolutely overbought. And this is a definitive crossover. It doesn't look like a bump and run where we stay upstairs in the overbought zone and bounce around. That looks like a pretty wicked crossover if you ask me. And momentum is probably going to carry us down and swiftly. So as we look at this current candle on the 1 day, we are sitting right here headed towards the second biggest node on the VPVR as we've blown straight through the point of control price, which is the biggest node on the VPVR. That says that momentum is going downward. And if we blow through this node right here, What that tells me is that we will probably have enough momentum to carry us through the red dashed line, after which point we would really be able to know quickly if this is going to serve as a resistance. We may cross through it and then test it up again, taking a breather, and then it could reject us as it could flip from support to resistance. That's pretty plain and clear to see here on the one-day chart, and making it back up to the purple dashed line is just off the table now. The rejection has happened, and I don't see any way of us going back up to test that red or purple dashed line in the near future. Now, what did I say on the last video as we were moving up? I said that we have not even gotten to the middle of September, and there are 2.5 full weeks left to go this month. We're not out of the woods, and as history would tell us, September is generally a bloody month. Combine that with the fact that the reports coming from Jackson Hole were very, very bearish and aggressive, where Jerome Powell said that they are going to pound down this inflation rate by being aggressive with interest rate hikes because they want to get on top of this rising inflation. He also stated it's going to be tough. It will be job losses. It will be a tightening economy, and it will be hard on people. Coming out of that, we still had a lot of people on YouTube who were claiming that the parabolic run is about to happen, that we're about to return to a bull market. And what did I say? I said, be careful with that. Be careful, because we are still in a bear market, and we are still within some of the worst worldwide economic conditions that we have seen for decades. All right, now that would pretty much do it for the one-day chart. Let's jump to the 1 week, and then we'll look at the other influencing factors, which would be the DJI and the DXY. And there's a couple things that I had mentioned in that last video to watch out for as it relates to the DXY. Now, let's start from the bottom and go up again, because I've been talking about this descending line right here that our oscillators on the MACD have been bouncing off of since April, since late March, as a matter of fact, of 2022. And since then, we keep kind of bouncing off this line. We went above it right here, as we have here, but it's kind of looking to me like we are probably going to return below this line as momentum is gaining strength to the downside. Now, we do see that there is a crossover here on the stochastic, but is that going to stick, or will it flip? Now, we were moving up here, and then we had a head fake, and we crossed over here bearish. Then we crossed over to the positive side when we had this great big short squeeze. Those two green candles right there are what happened after the exchanges liquidated all of the short positions, and they made a windfall of money. You got to know it. You got to understand that when everybody is betting to the downside, and the exchanges can see the bets because that's what their business is to collect those bets. Unfortunately, they can take advantage of the situation. And that's why I say that you should never play with leveraged trading if you can't afford to lose all of your money, because they can see your bets and they will take advantage of you if the majority of people are polarized and locked in to one side of the equation. All right, all that to say that this bullish crossover here could more than likely unfurl. And when we draw a line connecting the peaks, we kind of see that there is a downward slope here. If we connect all of the dots, we can see that overall we have the oscillators kind of bumping up and down off of this line. And each time they come up, we get a lower high. And we can get one more right here that could take us through the end of September. And it could happen again. We could stay down here in the overbought zone, or oversold zone rather, downstairs until we finish out the bear market, which could be a matter of a month, and it could be as far as 6 months. I wouldn't be surprised if this does not drag on until the end of the year. So looking at the price line, here's the biggest volume node that we're staring at, and then of course there's that big cluster down below. The current price. We are sitting at the peak node with a downward momentum, and then downstairs. Look way down here. Starting at about 11,900 and then 11,000 even-ish. That's what is possible that we could drop to if we fail the red dashed line. And that's why I have been continuously reporting about the action as it relates to that red dashed line. Because down below that line, there's not much that can catch the price. We could make it to this node, which is at a price of 15,000. We can make it to the next node, which is at the price of 13,000. The top of this one starts at about 12,000. And then, of course, the worst case scenario, which some believe could happen, is down around 10 to 11,000. Those are the possibilities if this momentum keeps up and if the worldwide conditions that we are under continue to worsen. A lot of people had the mindset that the world markets won't affect the price of Bitcoin, that the inflation rate could continue to go up, the interest rates can continue to be hiked, that we could continue the conflict in Ukraine and other world events, and that we could still blast off into a bullish romp. And again, we have to realize that the people who are reporting this information primarily want you to do leverage trading through Bybit and all of the other rip-off places where they are paid a hefty commission to get you to sign up to lose their money doing leverage trading. Also, you have to understand that they make a good income from their YouTube channels, and the hits to their videos, their view time goes up when they give positive and bullish reports. So they're not willing to tell you what they really think. If I think that this market is looking ugly, and if I think that the world situation, the economic situation could have an adverse effect, I'm going to tell you. And if that means I only get 100 views on my videos, so be it, because I can't sleep at night giving you clickbait and pumping out overly bullish and optimistic videos just to make people feel good so I can get more hits on my channel. I won't do it. That's not my style. All right, now enough of the 1 week chart. We're going to flip this around and we're going to talk about the DJI and we're going to talk about the DXY. Let's start with the DJI. Look at this. We have a gap. Now, this is bad news whenever you see prices open up below the closing price of the previous day. We bounced off of the 50 EMA. As we talked about in the last video, I said we were probably going to continue to move up until we meet this 50 EMA as the first possible point of rejection. And if not, it would be the 200 EMA. Since we got this negative report on the CPI, we see the panic has set in and the 50 EMA has served as that rejection point. And we had a gap down to start this day, which is still within this big, fat, nasty red candle as we speak. We also had a rising stochastic, but now look at this. There's a crossover. There's a touch point where the blue line is curled over and is touching the orange. That's probably going to cross over and take us back down in here into the oversold zone. We also had an impending crossover on the MACD. And what happened? We had an out of character rejection where the blue line was ready to cross the orange, but as soon as the report came out, the blue line curled over and did a 90-degree turn and is headed south. So the DJI is moving south. Let's look and see what it appears to be on the 1 week, and then we'll look at the DXY. So on the 1 week, it's just as bad. We have a very bearish stochastic condition. We have an impending crossover with the oscillators on the MACD, and we are at the tail end of these green bars on the histogram as we are printing light green and about to drop below the zero line. Now, at best case scenario, we're going to come down and test the 200 EMA. If we fail that, then things are going to look a lot worse. All right, so that does it for the DJI. Let's flip this back to 1 day and let's look at the DXY. Here we have it. Now, what did we talk about the last time? We talked about the possibility of the DXY coming all the way down to the 50 EMA line. We also talked about the possibility of failure there and returning to the 200 EMA. But as I had mentioned, I was not under the impression that the DXY is done with this current streak. Let's just peel back to the 4-hour real quick so we can see this. On the 4-hour, how we were below the 200 EMA right here. We failed it, but then we snapped right back up, and now we have exceeded the 200 and the 50 on the 4-hour chart with an extremely bullish romp happening right here on the stochastic. Okay, let's get back to the 1 day. So here we have it. There is an impending crossover about to happen right here. We also have a reversal about to happen with the oscillators on the MACD, where we had the bearish cross here, and now it's going to be a complete reversal as the blue line is on its way up. And instead of printing more dark red bars, there's a light red as we are approaching the 0 line. So it looks like, according to this 1-day chart, the DXY is definitely not done with this trend. This trend is going to be still moving up. In fact, let's make that in green. So here we have it. This trend continues to bounce around on the 50 EMA line as support. So this is a rising channel that is not ready to throw in the towel. Now, last but not least, here is the 1-week chart. Let's scrunch this in so we can see this. And this is nothing less of extremely bullish for the DXY. First of all, I thought we would come back down to test this 50 EMA. The CPI has said otherwise, as now we're printing this green candle here. We had a bearish crossover about to happen here, but I can tell you what, that's going to unfurl and it's going to flip back the other way, and we're going to move up on the stochastic. The MACD oscillators speak for themselves. Since back last year, look at the time period here on this straight ascending line, and this is the result of what happens with the Feds printing so much money. And now that we have printed ourselves to oblivion and we are raising interest rates, that also has a positive effect on the DXY. So I'm expecting this to continue on. It could be another month, and it could be several months. And as we know, as the DXY moves up, we usually see the Bitcoin price move down. All right, so that is our DXY, and I think we have hit it all. So all in all, we need to continue to hold the caution flag. The yellow caution flag is waving right now and saying you better be careful, because this bearish trend is hitting everything across the board. Alts are all red. Everything on my watch list is blood red. So that just about does it. And I would, of course, love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you would like to help me defray the expensive and rising costs, you see how this DXY is rising? Well, this is also the chart of what it cost me to produce these videos, because I keep getting emails from all of my subscription services that I purchase the rights to graphics, music, and everything else under the sun, my editing equipment, editing software rather, and they're telling me, hey, you're about to get a price hike. So if you would like to help me to defer, reduce the cost of producing the channel, you may do so with a super thanks. And I thank you in advance if you decide to help out. And look for some more preview videos of the premium channel for the members group that I am about to open up by the end of this month. I'll keep you posted. Thanks for watching. This is Carlton, and I am out.